Good evening, everyone. Thank you so much for joining in. We're very excited to roll out our latest opportunity, which is Pune Industrial Opportunity 1. Pune is an industrial hub. We've been eyeing for a very large industrial opportunity almost for about 1.5 years. We've done several investments in Pune, but predominantly have been office assets only. But this is something which we've been very bullish about as a sector, and especially this is the whole industrialized zone of Maharashtra in some sense, which contributes the majority to the GDP of India. So something which, like I said, we've been eager and we finally got an opportunity which we're very excited about. So the current opportunity is about to invest in a 80,000 square feet industrial grade A facility in Hinjewadi Phase 2. Hinjewadi today is becoming a hub for R&D and office spaces as well. Apart from these kind of R&D industrial facilities, there are certain data centers coming, but is now becoming a hardcore residential zone as well. Mid-market in some sense, and thanks to all the metro connectivity which Hinjewadi is going to have in another year or so, this will become prime SBD over a period of time from the peripheral business district, what it is today as such. So the current opportunity is to invest about 39.2 odd crores into a facility which is going to be owned, which is going to be tenanted to one of the world's largest manufacturers of precision pumps, compressors, and accessories. This is their first facility in India. They are about a 120-year-old company, and now are looking at entering India and exploiting the manufacturing boom what India is probably going to see in the next 10 years as such. The entry yield for this opportunity is about 8.1 with a 5% escalation. We have a 5 year plus 5 year arrangement, which is 5 year lock in, 5 year lease, extendable 5 year lock in, 5 year lease as well. Just that to avoid stamp duty, we're doing it from 5 plus 5. Otherwise, typically should have been a 10-year kind of a lease arrangement. So we're locked in for 10 years from an opportunity standpoint. The real catch to this opportunity is the unused FSI, which we would be having, which there is significant amount of exploitation and better returns which we can create for ourselves in future. I'll touch base on that, as we move forward in the presentation. Just a little snapshot about industrial CRE. Again, government has been spending significant amount of money to incentivize more and more companies to set up manufacturing, especially with the whole PLI scheme. What government had SEZ back in the day when we wanted to grow, IT in the country. There were a lot of SEZs which are open. Likewise, today there are no longer SEZs because IT has just picked up significantly, and that we don't need to give any incentives to anybody to open their shops in India. As such, likewise, we are at the cusp where manufacturing incentives are given to multiple industries specifically, as well as in general. There are zones where companies are being lured to have a C+1, which is China plus one strategy. Apart from that, electric vehicle is the latest boom which we are seeing as such. But more importantly, everything is only going to be spurred if government keeps spending on infrastructure today. Our tertiary, which is our logistics costs, our road infrastructure is only getting better, but so much more money government is spending year on year in that to ensure that the road connectivity becomes better, because logistics cost is a significant cost which makes us non-competitive enough from an export standpoint, which, with the kind of road, and we hear Mr. Gadkari keeps saying that, you can do Chennai, Bangalore in 2 hours, you can do Delhi, Jaipur in 1.5 hours, etc. And all these kind of corridors which are being built is only to make us more competitive as such, because the time and the cost it incurs for these things makes us very non-competitive from an export standpoint. So all these investments are spurred purely to ensure that with better infrastructure, cost, time, etc., becomes greater thing. Apart from the ports and other things where we're seeing significant infrastructure investments as well. Apart from that, back in the day, I was part of a conference where people always questioned, and it was more about, doing business in China. And everybody used to, in the conference, they asked that how many of you do business in China? I think about 45 out of 50 in the room said, we do business with China. When they said, how many of you do supply to China rather than only buying from China? and turns out only two or three eventually did that. So the real story is that China is also a great consumer market. Today, iPhone or Tesla, all these companies, major sales happen from China. As such, Volkswagen, for that matter, with the advent of electric vehicle, Volkswagen is in their 87th year history since inception is now shutting down factories in Germany because they're not able to catch up to the demand what electric vehicles have, and they're not probably advanced to the electric vehicle range which is going on right now. But having said that, those facilities were predominantly to supply to China, right? So what we're trying to say is that India is also a very, very large consumer economy. So as much as industrial growth you'll see is because we are also moving towards a very, very large consumer economy over a period of time where consumption itself would be very, very high. Plus, we'll have to keep building more and more facilities for exporting as well over a period of time, right? So that is where there's a lot of opportunity, especially in the industrial commercial real estate, and which is why, like I said, we've been eyeing for Pune for the longest time, and there are multiple other deals which are there in pipeline, which we're very confident we'll be able to bring on board as we move forward as such. In terms of location overview, so Hinjewadi comes as a peripheral business district. CBD, SBD is, your CBD is all your Viman Nagars of the world, where it's more high-end retail, more of your five-star hotels, etc. SBD is your Kharadis on one side and your Banir Balewadi on the other side, which is the most prominent IT zones where most of the ITS, tech parks exist today. PBD, which is Hinjewadi and Pimpri Chinchwad, is where your high-end industrial to a little who are cost-sensitive kind of office zones exist as of today. And the real industrial zones are effectively your Chakan, Ranjangaon, Talegaon, which is further ahead of Hinjewadi and Pimpri Chinchwad as such. But in Hinjewadi specifically, with the metro connectivity and everything which is due in the next 1 to 2 years, if you see from a stock standpoint, it is equivalent to an SBD in general, and this will be the new SBD in the next 2 3 years as such, with so much of residential growth which is coming. In that market, like I said, there are certain data centers and IT parks also which are there and are getting built. MSC REIT has a very large facility, in fact, very close to the property which we are acquiring as well. So this is a market to look after, and even our previous opportunities, we have been investing in Hinjewadi, and we would like to continue. It's inking our or echoing with our thoughts that Hinjewadi is a future growth story, which we would like to continue staying invested into as such. Location overview. This is in Hinjewadi Phase 2. This is an industrial zone. Obviously, there are a lot of CLUs, change of land use, which is happening where people are building a lot of residential and office spaces and data centers. Having said that, which is why it's very exciting from an opportunity that we're getting a good 10-year lock-in lease kind of a tenant. We will recoup our entire investment during that time, and it gives us an ability to exploit the opportunity or the land which we'll be having underneath for future as such. And this is a 5 acre land where we are investing right now. Metro station is just about 1 kilometer by road and about 600 700 meters by walking. So it's very close to a very large metro station. Around railway station and other things are close by. But Hinjewadi again has its own advantage because you can exit and enter the Navi Mumbai airport, which Adani owns and is going to be operating. So it's going to take just about 2 hours out drive, if I'm not wrong, to reach there. So that is another prospective advantage which we see with Hinjewadi over a period of time as such. Again, just in terms of the tenants in the vicinity, Tata Autocomp had a very large facility over here, which recently, about 11 odd acres of land, just about 300, 400 meters away from our facility. They just sold to a very large developer in Pune, and they're doing 2 million square feet residential development. So where our land is situated, this is the entire Tata Autocomp's facility as such. There's Honeywell, there's Infosys campus, Wipro's campus, Cognizant's campus. Just about 1.5 kilometers from our property where we are currently situated. So it's in a very prime location. As such, we've invested in Hinjewadi Phase 1, where we own an entire building as such. This is in Hinjewadi Phase 2, which is just about 2 to 3 kilometers odd from Hinjewadi Phase 1 as such. Again, I've already mentioned, but why Hinjawadi? It's a major IT/ITES hub. Currently, your SBD, where your Baner and Balewadi rents are about 100, today rents over here are about 50, 60 rupees. So for any price sensitive tenant, they're probably considering here. Second, all these factories are now, which exist today because the land prices are expensive, are all close to over 20 crores an acre. As such, all these land prices have really shot up, and most of the factories are now further moving to Chakan, Talegaon, Ranjangaon, Sanaswadi, and all these kind of places in general. So all these areas are going to now change significantly. There's high demand for white collar and R&D labs in these facilities in Hinjewadi in general, and our tenant is also doing an R&D manufacturing and an office in the same complex itself. Great connectivity to the rest of the Pune. Like I said, with the metro, which is going to be ready in about 1.5 years from today, it'll be a great connectivity for anyone to reach any destination. For tenants who are looking at setting up, let's say, an R&D manufacturing, Chakan is also an opportunity. But the problem is attracting the right kind of talent to Chakan because Chakan is really far from these places. It's from the airport, if I'm not wrong, it's about 50, 60 kilometers away. As such, and attracting talent, high-paid people, especially in R&D, who are skilled people, very difficult for them to retain or attract them to that destination. So Hinjewadi and PCMC, which is your Pimpri Chinchwad, are your only two options which one can look at in terms of these kind of facilities to build for. There is limited supply of industrial land. Like I said, any lands today, no one is building large factories. We are the ones doing it or investing in general in such an opportunity. Again, the way we look at it, that there is an FSI of almost about 4.5. We are currently using sub 1%. So there's so much in terms of value appreciation which we can create for ourselves. Once the lease lock-in ends from a tenant standpoint, and figure out how to maximize more land, more potential for our investors. Again, it's a favorable social infrastructure zone with several schools and hospitals nearby. So it's an own city in itself. Hinjewadi phase 1, phase 2, phase 3 put together, and little beyond that as well, where Gotavadi and all the other places are there. And it's a shift, like I said, very, very confident that this PBD will become SBD in 2, 3 years, 4 years tops, and will become a very, very prime, investment destination for people in future as such. Just a little bit about news and something worthwhile reading. Hinjewadi, a blue chip investment opportunity you can live in. It's on Times of India. Whenever you get time, just put these keywords and read those articles. You'll get an idea about how things are shaping up in this particular micro market in general. Now, in terms of demand supply characteristics, there's limited supply of industrial land, and hence it's a good opportunity for us to invest into this pre-leased for us to maximize our advantage in future. Apart from that, it's close to PCMC and other high demand, where there are skilled laborers or skilled resources available for people to do it. Attractive rentals compared to Baner and Balewadi. Like I said, it's half the rent what buildings are commanding in Baner, Balewadi. So there is a lot of demand for that spillover also to keep coming in future. And in this particular opportunity, it is an extension to a Pune growth opportunity which we had done in the past. So we've been working with multiple tenants. There are close to 5 RFPs. We chose this particular tenant. Again, the pedigree of this tenant is very, very prime, and Kalyan will be taking you through that in future. And hence, we felt this is definitely something which we are very excited about from an opportunity standpoint. Over to Kalyan to take over.
Thank you, Sudarshan. Good evening, everyone. So every time that we mention one thing that we are very, very careful about when we choose an opportunity. We always ensure that we are getting a grade A facility. So be it office, be it warehousing, or be it industrial, that it is here, we have to ensure that it is a grade A plus facility that we are providing to the tenant. Two reasons: the tenant is going to stick a lot long, and as investors, you will maximize your profits and you will maximize your return on capital if the asset quality is very, very good. So I'll make an attempt to explain you a little technicalities about the asset that we're building, about the tenant, about how this is grade A plus in terms of industrial, because we have spoken a lot about how we see grade A plus in office. So this is a great opportunity for me to present to you why it is grade A plus industrial. Simple, it's a industrial, which is a manufacturing, R&D, and an office. It's combined together. I'll show you to the render, and we are investing close to 80,000 square feet of total leasable area. So, very important to note that these buildings are not speculative buildings. By speculative building, I mean the building is made first and the tenant comes later. This is called built to suit. Built to suit basically means the tenant tells us exactly what he wants in terms of stuff that I'll explain to you right now. So whenever a tenant wants gets into a property which is built to suit, he himself does a lot of capital expenditure in order to maintain the facility, in order to run the facility, because these are complicated machinery that is getting exported and imported out of here. So it's very important for him to maintain the quality, and hence it is important for us to build that product for him so that he can be there for 5+5 or probably more from now. So next one, please, Arshan. So this is how the land looks like. If you look towards straight up, it's north. On the left side, you have a hill. So there is nothing that can come there. We have bifurcated the entire land into two parts, which is phase one and phase two. Phase one is the orange portion that you can see from there. Phase one is leased to this tenant, and the larger rectangular box that you see here is the industrial manufacturing facility. Right adjacent to it, next on the small orange box that you see is a G+3 office with parking. Phase two is something we are in advanced talks with another tenant, which we will be getting on board soon. Very important to note that on just below, if you see the orange portion, you'll be able to see the bays. Those are bays for loading and unloading this things that they're going to manufacture. So it's very important for us to know what they're doing in the facility. They are going to be building compressors, pumps. These pumps and compressors and machinery is used by oil and gas, deep sea drilling, thermal power stations, and they weigh somewhere between 20 to 80 tons. So it's very, very important that there is such arrangement being made, which I'll explain you now, that the machines that they manufacture come out and get loaded onto these trailers. These are 60 feet trailers. And as you can see, very technically done, how the turning radius, etc., is going to be, and how they're going to enter, the trucks are going to come out, because there has to be those arrangements being made that they are away from the employees who are working out there. So this is how a manufacturing office, industrial and R&D setup ideally looks like. And now once I go to the next slide, I'll be able to explain why this is grade A+ and what exactly is happening. So this is almost what the property is going to look like. On top, you can see on my left side where the cursor is there right now, you can see there is something, there does ducts that you can see you supplying air. So this facility is exactly something what we call as AC or a VRV HVAC system in an office or a house. Here it is called evaporative cooling system. Let me just point this out to you that many factories do not have evaporative cooling system. They just have HLC fans. Here it's a combination of both. So basically the tenant himself on the left, as you can see, there are 8 ducts which are supplying cool air, because Pune gets very hot and people work in 2 shifts. So we're talking about at least 300 contract level workers working out of 2 shifts. So they have to be comfortable. So the management is spending considerable amount of money in evaporative cooling system. And the other side, if you can see on the top right side, that part again is which is pumping in this air, and that is going to get circulated. Right below is a skeleton of how the office and the factory is going to look like. As you enter the office, you can straight away get an access to the factory as an employee. And that's how the manufacturing things will happen. So people here, the engineers and scientists. So here when Sudarshan mentioned white collar qualified talent, we're talking about high quality engineers and scientists working out of this facility so that these manufacturing pumps, etc., can happen. Right below, as you can see, is a bird's eye view of how the facility is going to look like. And this is what industrial manufacturing is, with facade, which is double DGU facade, which is basically controls your lighting, saves electricity, etc., is being done. We are providing that to the tenant as a part of our base build model. And the rest of the thing that is being given to the tenant is also something which I'll explain. Next slide, please. Yeah. Now, very important to note that when you have a 20-ton or a 40, 60-ton machine coming out of it, what kind of floor load or what kind of flooring you should have that can take a load of that machine to move. So the floor load on the green bay in between that you see right now is around 10 metric ton per square meter, which basically means that the floor that you are sitting on right now is somewhere between 300 to 500 kg per square meter. This is 10 metric ton per square meter. That's because the machines will get manufactured, they'll come out from here, and then they go to the loading bay and they come out of the trailers. To support the machine movements, we're going to have cranes, which are called EOT cranes or the overhead cranes. These are tonnage of around 12.5 tons. These will carry the machines. Currently, there are going to be three bays with three 12.5 metric tons of tonnage of cranes. And there are going to be these small yellow, you can see the small cranes out there, which are called zip cranes. Currently, there are six of them, and the tenant is expected to have at least 20 cranes in the facility in the next 4 to 5 years, because as of now, as we speak, the total order book of the tenant from this facility of next, say, Q1 of next financial year is already close to 200 crores. So that's when we get the, as asset managers and as you as investors, you get clarity on the financial strength, because this is a booming industry that this particular tenant is operating out of. See, Pune, although is known to be an automobile hub, it is also a hub of equipment. So you have very large companies which makes these things, which is pumps and compressors, etc. You have Atlas Copco, you have KSB Pumps, both listed entities. Atlas Copco has grown from 1,000 to 8,000 crore market cap, and KSB Pump again has grown significantly. That's the reason why this particular tenant has chosen to be in this facility, especially in Hinjewadi and in Pune. They used to be in a place called Aund, where they did not have a facility. They just set up their office 3 to 4 years back. But now they've realized that this kind of order book, they need a grade A plus facility, which we are providing for them. Next one, please. So important again that we, when I told you about a grade A plus office and industrial facility, I dwelled upon the technical aspects of it. But it's very important to know that you always also need to have a grade A plus tenant. By that, I mean a tenant which is a large pedigree. This is a 1905 company and is always been institutionally held by very large private equity investors. They have changed hands and now currently hold by one of the largest top tier PE investor based out of the US. Again, they're into this business of manufacturing of pumps and compressors, and they are serving close to 100 countries. And this facility is going to be the first in India outside of France. When we did a particular tour on the on video once with them, and they showed how exactly the factory in the France, we are probably replicating or making this better than the facility they might have in France right now. And hence we are constantly on working with the tenant, and we have everything in place now to go ahead and invest this money and make this asset possible and hand it over to the tenant. So from here, I would probably request Sudarshan to take over.
Thank you, Kalyan. So as Kalyan mentioned, again, three checks very important, or rather four checks. First, with respect to location. Second, with respect to the terms at which we're coming. Third, looking at the future potential. To what Kalyan mentioned, and I mentioned before, the FSI of this property is close to about 4.5. There are residential catchment in and around this entire property, and we are currently exploiting sub 1 time its FSI. So there's so much potential for us to unlock in terms of value. Our approach has been very clear that in 10 years we recoup our entire investment in the form of rents. Effectively, it's investment, or it's a free property which is there, and it's a sizable value. We can always do a joint development, sell it, enter into JV, or do anything of that nature which can fetch us far more in terms of our value appreciation. So an investment in general from this particular opportunity has to be thought through from at least a 5-10 year kind of a mindset. Wait for the lock-in lease to end, and then do the actual exploitation of this particular land, which Kalyan and his team have been very fortunate to identify such an opportunity for us. So that is the whole thesis about this particular deal. Just in terms of financials, we are entering into a 5-year lock-in, 5-year lease, extendable 5-year lock-in, 5-year lease with an escalation of 5% every year. Our rent commencement would be, tentatively, we are envisioning 15 days from registration. So from the entire collection of funds, we are envisioning the entire collection of funds to be by end of September. And from 15th October, our rents would commence for investors on a month-on-month basis as such. Handover to the tenant is in January, where he will take over the premises and start operating and start installing his machinery and equipments, what he'll be manufacturing from. Just in terms of the consideration required, it's about 36.55. Brokerage for to the seller, sorry, to the broker who got that's the tenant is about 1 crore. It's 2 months of rent effectively. Acquisition fee, legal and reserves, which are standard charges which are there as part of the transaction. Such. Just in terms of financial model, again, like I said, it's a 5-year lock-in, 5-year lease. We've estimated if you want to exit at a 5-year at the end of 5 years. Having said that, we strongly recommend from an opportunity that the real value is to stick around in the entire lease duration where we repay ourselves the entire money we've invested and look at exploiting this particular opportunity or the true potential of this particular land as such is the real deal as such. Again, we've only estimated that okay, we enter pre-leased and we exit pre-leased as such, and hence a 5% annual growth rate. In the event we do go for exploiting in true sense the real value of the land and the opportunity which it can uh, culminate, after the lease duration is completed. We can envision anywhere between an 8 to 10% kind of an annual growth rate, which will increase our IRR drastically as such, which we are confident about. But again, trying to be as conservative, we feel a targeted 13% IRR is easily achievable from this particular transaction. Just in terms of our investment thesis, it's an in-demand location, Hinjewadi. If you have any friends in Pune, do reach out and check on what they think about Hinjewadi as a market and what the future stands about. We're entering at a good yield of about 8%. Considering there is significant unused FSI in this, and 8% is effectively we're making an 8% return on just our land investment is the way we look at from a transaction. And there's so much I can do once I have paid back myself the entire investment I've made in the form of rents in 10 years odd. It's a diverse development opportunity which exists apart from, like I said, today we're investing in industrial, but there's so much which can be done beyond uh, this in this particular land over a period of time where it might be a great opportunity. This is very closer to or something which we've always looked upon. We had done a pharma opportunity in Bangalore where the FSI was about 3, utilized was about 0.5. So there's so much in terms of activity. In fact, right opposite to our property, there's DLF, which has built a residential complex utilizing the entire FSI. And we still have a 8-year lock-in pending in that particular property. Likewise, this is after that deal, which was in 2020. This is perhaps another deal which we're doing where there is so much unused FSI and potential for us to keep doing. In fact, in this premises also, there's going to be a lot of steel, aluminium, which is going to be used because it's a PV structure. The realization and the salvage value out of that also is something which we can recoup from in future in the event investors decide that what, let's go out and exploit the maximum out of this particular land opportunity. But yeah, that's the background about this particular deal. The minimum investment is about 30 lakhs in this particular deal. Again, we're trying to be closer uh, to the multiples what REITs might have in future. We've made our SM REIT application and hopeful to get it soon. And hopeful that this opportunity, after your consent, will be given a consent by SEBI to migrate it into the SM REIT as well. And hence, from that standpoint, we try to be closer to the 10 lakh multiples, and hence it's 30 lakhs. Management fee will be 1%. There won't be performance fee because we are trying to replicate our business model closer to how it will be in future, and hence there won't be any more performance fees which would be charged for all the assets which get migrated into the REIT, our existing portfolio and the future deals which we would be doing as well. So it'll be just management fee would be doing. And in the SM REITs going forward, we will also be investing our 5% in every deal, and we will be locked in for 20 years, and we cannot exit our entire holding until that duration. There's a cascading effect. But having said that, we will still be locked in of our money for close to about 20 odd years as such, or before we exit this entire deal all in by itself, right? So, but that's the background of how SM REIT and its regulation. We've We did one session in the past. We'll do more detailed sessions about SM REITs once we get our license to educate people around how SM REITs will be functioning in future. But that's something which we are very excited about. Thanks to the regulator for regulating this industry so soon, and we definitely feel that there's a lot of promise and future holding for this industry going forward as well. Just quickly about us, we today are about 2,000 odd crores in terms of our AUM. A couple of assets are yet to register. We've done industrial office, warehouse, retail. We've done a hospital as well, which we had concluded about last month. It was a 200 crore hospital which we've invested into. Uh, we have all the premium tenants, right from Saint Gobain to Havels to Acco, Puma, Regal, Rexnord, pipeline infrastructure. These are all the kind of tenants we have within our portfolio. Our leadership team, just about our asset management, where we take care of end-to-end and day-to-day activities about the property in general, pre-investment and post-investment. In general, we have a dashboard where you can track. Several things will change once the license is obtained, and there might be certain things which completely were done by us. Will now be having to work with intermediaries such as KFintech, which is Carvi's platform, CAMS, and all these companies would now be operating, because once you get into the SEBI umbrella, you'll have to work with these intermediaries for a bunch of these things. So there might be certain changes, and we'll keep notifying you these changes. But otherwise, this is the current dashboard which is there, where you can track each and everything about your investment opportunity in general. This is a dashboard and the app which we have, where you can track right from your rents which you generate monthly in the form of interest to your TDS reports, etc. All this is made available very, very easily. It's both on Google Play and on the App Store for one to track their investments or keep investing via this application also over a period of time. We've been backed by certain prominent investors, and hoping we continue and try to be the largest in this particular market or in this particular industry over a period of time. We today partner with Universal Trustee, which is an ICICI trusteeship services company. Our escrow partners are ICICI, and we bank with HDFC. But going forward, these partners will also change once we move into the REIT environment as such, and all these things will be notified to you as investors, over a period of time. So that's a quick about us. For people who don't know, we have 4 offices in case you wish to visit us at any point of time. We're there in Bangalore, Mumbai, Pune, and in Gurgaon. Do drop by, notify us if you would want to come visit and say hello as well. We'll be more than happy to always host you in our offices and enjoy a cup of coffee with you. Until next time, thank you so much for your time. Hoping for a valued partnership over a long term. Thank you.